Those also in a bit from now. But indices as always, and we'll pick it up from there. What do we have? The Nifty Bank was in the red. It's ticked into the green. So let's see, but absolutely flat. 51,300 on the Nifty Bank. It's about 1/3% cut on the Nifty. 24,671. We are absolutely exactly at the October low. 7th of October low right now. The Sensex is down about 1/3%. And the IT services index, and I think we'll look at individual stocks, but 1.5% cut on the Nifty IT index. That's getting smashed up a little bit. So 42,270 or so on the IT index. And as you can see, the Nifty heat map is emerging into view, and you've got, 13, 14 names in the green, but the vast majority is in the red to begin the session. 78, 80 points lower for now. Rima.
Well, the IT index is getting smashed because of Infosys. It's straight away down close to about 2.5% at open as the numbers fail to excite the street. No positive surprise, and Infi is under pressure. Bajaj Auto continues with its weakness. Yesterday, it was down 12-13%. It's followed it up with another 1.5% fall. And the other, auto names, particularly M&M and Maruti Suzuki, continue to get hit. So these two stocks too down 1.5%. Now, Shriram Finance has been, under pressure. Yesterday as well, it counted amongst the top losers, and it's another follow-on now. It's a 3% fall on Shriram Finance, so it's overtaken Infosys as the top Nifty loser. So 3.2% gone on Shriram Finance. Infi is down nearly 3%. Maruti, Bajaj Auto, and M&M. Then these are the three stocks, where the weakness is quite, exaggerated, 1.5 to 2%. Titan under pressure. Tech Mahindra ahead of numbers tomorrow is also a bit weak. On the way up, you've got Axis Bank post their Q2 numbers. That's the top Nifty gainer, 2.5% higher. Wipro has opened up in the green. Remember, Q2 was strong. The Q3 guidance was dismal, but maybe the street is seeing the Q3 guidance as being a bit conservative. It's a new management. Maybe the CEO is being a bit conservative because even in Q2, he ended closer to the upper end of his own guidance. So perhaps, the guidance is taken in its stride. TCS today has gone ex-dividend by 10 rupees per share. The stock is mildly higher, and Eicher Motors is bouncing back, and some green seen on Sun Pharma. At the index level, it's about 0.5% gone on the Nifty and the Sensex. The Nifty down 130 points, but mid-caps are taking it on the chin.
Well, that's right. You have only 380 stocks that are advancing, Rima. And as we speak, the Nifty has hit its lowest levels we've seen since the 20th of August. So, that's another data point. We're now moving towards 24,600 odd mark. We need to bounce on somewhere around here. Otherwise, we're bracing for a level closer to around 24,000, or that's what it suggests on the charts. Stocks in focus, it's a perfect example of pre-positioning. On the Nifty itself, you have the biggest gainer, which is Axis Bank. The positions were such that there were a lot of shorts that got built up into the system. And now Axis Bank is the biggest gainer on the Nifty. It's up closer around 3%. So the shorts are being taken to the cleaners. And on the flip side, you have Infosys, that the street was hoping for a lot of positive surprises. Well, the numbers were pretty much in line, and the positioning was such that because of that overweight long positions, they are all getting unbound in today's trading session. That's the reason why that stock is down 2.7%. Stocks that are moving around, IGL, MGL, both of them down 8% each. Big downtick is what we're seeing. Zomato, they want to raise money. The street doesn't know why. So that's why that stock as well is down closer around 3.5%. We'll wait for further clarity on that front. What's doing well? Pidilite is up close on 2%. So that's standing out as one of those big winners. Manappuram is locked down close to around 10% as we speak. So big downtick is what you're seeing out there. And Muthoot as well, for the time being, that's down only around 0.5% or thereabouts. But this cut is getting a little bit more wider now. We're headed towards 24,600. Let's see if at any point of time we see a bit of a bounce in the Nifty Bank as well, trading with a cut of around 100 points. If we have to see a bounce, it'll have to be the banking pack that'll have to do the heavy lifting today because IT is dragging.
And Nigel, so yeah, 24,600 around on the Nifty. And you just want to look at a few other names, right? Polycab is the second biggest volume-led loser. It's down 5.5%. This is, of course, earnings reaction. There's a margin miss for Polycab, as there was for KEI, and I think for Havells as well. So these wire and cable companies not having a good day. Guess what's the third largest volume-led loser? It's KEI. KEI is down another 4%, and it's come off quite sharply in the last 3 days. So 3 days back, stock was at about 4,700. It's under 4,000 rupees now. So that's a pullback. IGL is down 8%, and Sonal was just talking about some of these names. I mean, again, that's a very large move coming in on IGL. But let's just look at the others as well. MGL and Gujarat Gas as well, and see what's happening. In the pre-open, they were all down 4% each. MGL and Gujarat Gas will come up on your screens, and we'll look at those as well. Shriram Finance is down 3%. There you go. MGL is down 8% and Gujarat Gas is down 3.5%. Shriram Finance is down 3%. It's got volumes in it. There is CET, which is down 5.5%. CET is a big mover. 27.36 on CET. Again, there's an earnings reaction. And I think as we highlighted earlier, Manappuram is limit down 10%. So for the time being, temporary freeze, I'm assuming. So 100 and just about 160 basically on Manappuram at this stage. Gujarat Gas and Quick Heal is another mover. Quick Heal is down 10% as well. Stocks at about 687 right now.
So Quick Heal is reacting to numbers, disappointing numbers. Profits are down 67% year on year. So that explains the 9.5%.
And I think it had a bit of a run-up going into these earnings. I remember one of these days had a 10-12% kind of a move. So maybe there is that element as well. On the upside, Axis, of course, is there. Mazgaon is up about 2%. Wipro is still 3% higher. These auto names, maybe if you can quickly take a look at the Bajaj, which was the big knock yesterday, because iShares is up about 2%. iShares also was down about 3.5-4%. Bajaj is down another 1.5% after yesterday's 12% cut. Look at M&M, which was also down sharply. And Maruti, of course, is the other one, which should also come up on your screens. So, that's basically the picture. And what we'll do is we'll put some of these MFIs and NBFCs just to kind of see if there is anything which the market is making of the RBI actions for specific entities. We're seeing the action on Manappuram, but if there's any signaling effect out there at all, especially microfinance companies more than anything else. Well, let's welcome in Pankaj Tibrewal. He's founder and CIO at Ikagai Asset Managers. Pankaj, good morning. Great to have you with us here. Thank you for your time. So we are in a bit of a firm downdrift. You've been cautious for a while, Pankaj. Now, the point is earnings are coming in, but markets had kind of written off second quarter earnings. They were looking at H2, third quarter, fourth quarter for recoveries. But is there a sense that maybe this festive season, which is an important part of 3Q, that perhaps is coming a little soft? We got an indication from Bajaj, for example, yesterday. What are you picking up?
Good morning, Prashant. What we have been saying is that earnings growth is slowing down, and partly to do with the high-frequency indicators which we have been tracking. The government has slowed down spending considerably. And if we look at the first 5 months till the data is available, the capex expenditure is down by 20%. And if government wants to achieve that 11 lakh crore kind of a budgeted number, incrementally they need to spend 1,25,000 crores every month, which seems to be a little tall task. And hence you are seeing some kind of a slowdown. And we have been a little careful saying that the earnings growth momentum, last year we saw 30% earnings growth for the broader market, should come down more towards 10 to 12%. The way the earnings season has started right now, looks like the Nifty earning growth should not be more than 9 to 10% for the whole of FY25. On the festive season, yes, what your comment was that it started on a softer note. We have seen different pockets, behaving very differently. On two-wheelers, though the commentary by Bajaj was a little tepid, but the registration data which we saw is not that bad. Registration data is still showing some growth, maybe lower than the expectation what the market was, penciling it at. On the consumer durables, ACs have been quite okay, though there have been some softness in other categories. So we believe that overall earnings momentum has started to slow down. And Prashant, if you remember what we discussed in our newsletter, is that whenever earnings growth slows down, the rally in the market becomes narrower. And we have seen in the past that, it's very important then from a bottom-up stock picking perspective. And we believe that the easy money, which we saw in the markets for the last 3 years, is behind us. Markets will become more and more selective. as you move ahead in the next 12 to 18 months. And here, portfolio construction and stock selection will play a very important role in generation of alpha. So my sense is that one needs to be a little careful on the names one is owning in the portfolio, and companies which can deliver 15-20% earnings growth will again become darlings of the market as you move ahead.
Pankaj, hi, morning. So, which are the sectors, stocks, themes where we are likely to see the biggest earnings downgrades or cuts versus expectation? And are you lightening your position in those?
So, if you look at in the first half, the major, sectors which have been dragged for the overall earnings growth is metals, oil marketing companies, energy as a sector entirely in terms of upstream, downstream, cement. So most of those sectors have led to a large bit of disappointment. And if you look at the start of the earnings season, clearly 4-5 companies are leading to a bit of a downward revision. First is the steel companies, both Tata Steel, JSW, and then Reliance and ONGC, which are leading to a bit of a downward revision on the heavyweights. But broadly speaking, I think earnings moderation is clearly on its way. And across sectors, we are seeing that the estimates are on the higher side, and we need to be a little careful on the broader market. Though, compared to Nifty, I believe that mid and small caps can offer better earnings growth as you move ahead. But overall momentum, which we saw for the last 5 years, where Nifty 500 companies compounded their earnings at 22%, probably may not be repeating this year and next year. So in that case, the breadth will become narrower and the style change is definitely happening. For the last 4-5 months, if you look at value, momentum, high beta, they have all taken a backseat, and low volatility, growth, and quality has made a comeback. And that is visible from the indices. Also look at the dispersion within sectors. Defense index is down by 18% in the last 3 months, whereas the healthcare index is up by 14%. And similarly, if you look at the financial services index, it's in green. The consumption index is in the green. So I think broadly, dispersions are very high. And there, if you are good at stock picking from a bottom-up perspective, because the breadth is becoming narrower, the portfolio should reflect that.
Hi, Pankaj. Good morning, and always good to see you. And Pankaj, you have been sounding cautious. You have been warning us every time on the channel as well. Earnings needs to show up. And in the last 48 hours or so, there's been a lot of concern on all the earnings that have come out, across sectors, whether it's wire and cables, whether it's some of these tech-related names as well. Pankaj, but, you briefly mentioned that there will be select companies that will grow that 10, 15, 20%, and they'll be the darlings. Our viewers would like to know, where do we find those darlings? If you could give us a sense, which sector could it probably come from?
So, Nigel, we are debating within the team, but the broader thought is that our belief is that consumption may make a comeback. And the thought is as follows. If you look at the last 4-5 years, government expenditure was about 3.5 lakh crores. It's moved to about 11.5 lakh crores. And a large part of that spending was across sectors like defense, roads, railways, and so on and so forth. The question is this 11.5 lakh crores moving to about 17-18 lakh crores? Our sense is probably it will be a bit slower than that. And hence the tailwind which you saw from a government expenditure perspective may not be there. Now the baton passes on to the corporate sector and the household capex, which is nothing but real estate. And they are coming back, but they are not with as force as the government expenditure was. So clearly you would see a transition which will happen. On the other side, when I look at the social scheme across states and center, that is picking up. Look at day before yesterday on the Rabi side, the MSP side, a clear boost of about 25 to 30,000 crores to the farmer. And then look at the schemes announced for the Maharashtra state election, Haryana, Jharkhand, and then it will be followed up by Delhi and probably UP at some point of time. And our calculation suggests that about 0.8 to 1% of the GDP could be spent on social welfare schemes, which was not the case for a long period of time. And if that happens, money will flow at the bottom of the pyramid. And we all have been talking about a K-shaped recovery in consumption, where the premium end has been doing well, but the mass consumption of the lower part of India has been suffering. I think that can reverse at the margin. And we believe that some of the names out there probably have started to look good. On the headline basis, let me put a caveat. All these names will look expensive. But again, I repeat, if they can deliver 15-20% earnings growth with some kind of a visibility, I think markets would love that because earnings growth will become scarce as you move ahead in the next 12 to 15 months.
Thank you, Pankaj, for your time. Enjoy your Friday and the weekend, which lies ahead. Now let's move on to the auto sector. Now, after yesterday's fall, today as well, you are seeing cuts. I think Bajaj Auto once again should come up for you on your screen. The sell-off precipitated once the Bajaj Auto management said that they're cautious about festive demand. So far, it's only been 1 to 2%. And at best, according to them, it should be 5 to 6%. There you have it. Bajaj Auto still down more than 2%. So to talk more about it, Gautam Sai Polavarappu, Director of Unity Motor Works and a member of FADA, and Abhishek Gaushinde, Deputy Vice President Research, Sher Khan at BNP Paribas, joining in. Thank you, gentlemen, for joining in. Gautam, come in. Bajaj Auto has told us that things are looking bleak, but some of the registration data seems to suggest that it's not as bad on the ground. So what is your data throwing up in terms of retail sales, registrations, and the outlook for the festive season, the numbers you're building?
So basically from the retail point of view and the dealership point of view, we operate in rural part of India in Andhra Pradesh, and the overall growth anticipation for the whole festive thing came majorly from two-wheelers and commercial vehicles and three-wheelers in and around the festivity. Obviously, there has been a little slowdown on the passenger vehicle side. But as you rightly said, that the registration data shows year-on-year growth also, because obviously brands like TVS or Bajaj or Hero are doing good on the export sides, as well as coming up with new products. And overall, I would feel that auto industry is going through a transformation. Where earlier we only had fuel-based vehicles. Now we also have new energy vehicles, which is the EV sector or the hybrids and all of that. So a little bit of confusion among the customer, which product to choose and which vehicle to ride on. But apart from that, when you compare it with probably the last year festival, obviously the rural India did respond well for us in our dealership areas.
Gentlemen, good morning. Prashant here. Abhishek, if I can come to you, what did you make of Bajaj's comment yesterday? And the stock was down sharply that, so far in the festive season, which is 10 days or so, they've seen 1 to 2% growth. For the entire season, they're seeing between 5 and 6% growth. This is for the festive period. Did that come I think it did come as a surprise for markets, right? And what to make of it?
Yes, broadly it is surprising because whatever the feedback we have been getting from the markets, other OEMs, ancillary players, and the other stakeholders, they are indicating for a better growth prospects in this festive season compared to the previous year. Although currently only the 20% of the festive period has been gone, but so far the feedback which the street and we are getting was positive. But Bajaj commentary was quite surprising, even though the result was almost in line with the estimates, adjusting to that 211 crore kind of for this one-time provisions. But because of this particular commentary, it has impacted the Bajaj Auto stock price as well as the overall sector. But beyond that, what is that? There is a catch-up was there. So beyond that, at certain point of a time, it was quite difficult to justify that the price point at which the stock was trading before the result season. So some kind of correction was expected.
Yeah. Abhishek, and just to be clear, we are talking about retail sales, right? Not wholesale.
Yes.
Retail.
Yes, it's not wholesale. See, what happened that this 30 to 40 days period is more for the retail sales. So if I can give you the background that in last year also what has happened that during the Navratri period, the passenger vehicle sales were tepid. But after this Navratri, the sales has picked up, and the passenger car segment ended with a 10% kind of a growth in the last year. Although for this year base is high, and in the passenger car segment things were not so right. But in two-wheeler segment, whatever the feedback we are getting from the other stakeholders, they are quite optimistic, and their performance is as per the plans. And see, in the first half, now see, in quarter one it was a heat wave, and then we have a Shraddha period and all these things. So some kind of a pent up demand is also there. So we have been in a view that this festive season will hold good for the two-wheeler sector also.
Okay, all right. Hi, Abhishek, and good morning. Good to see you, Ben. What's the approach, though? After yesterday's fall, everyone's wondering whether or not a stock that was the toast till now. Everyone was, saying Bajaj Auto is the stock to look at. After the 10% fall in today, as well as seeing some follow through, how would you approach the two-wheeler names, and what's the pecking order?
Yes, there are 2-3 things in this poll. It is not all about this commentary also. Even if you see that Hero MotoCorp has already been corrected by almost 10-13% in last 1 month. So there is a seasonality comes into the play. Generally, if you take the data for the last 15 years, so during the October or in November, in 1 month gives you a negative return in this auto index, except in the 3 occasions. And most of the occasions, this auto index has given negative returns either in October or in November. And there are only 3 occasions where the positive returns. So one is the seasonality. Second thing is that in this particular, in the running quarter, the growth in automobile sector is expected to be moderate. We were expecting just 2% kind of a growth in the overall revenue from the sector due to the high base. So high base is catching up. And third is that before that, we have seen a strong outperformance. So, and beyond that, if you see after the festive season, we are not seeing a healthy, you can say, a continuation of this retail sales. So obviously the wholesales will moderate. And if you compare it to the previous year, so what would happen in the quarter 3 is that you will be entering into the inventory adjustment mode, and previous or quarter 3 was the inventory build-up mode because of the change in the festive. Things are accumulating in this quarter, and on top of that, the Bajaj Auto's commentary has impacted the performance. Now going forward, what we see that post this correction, again the valuations have been corrected. So if we assume that the quarter 3 would be moderate, and the quarter 4 where we have a lumpiness in this marriage season, so some kind of a demand would come up or the overall consumption pattern will revive. We continue to have our top pick in overall auto packers as the Tata Motors and the Hero MotoCorp. Hero MotoCorp largely because of the valuation per se, and the Tata Motors we are expecting H2 would be better than that of the H1, and that thought would continue.
So Gautam, if you could just give numbers, the retail sales so far for individual segments, two-wheeler, CVs, tractor and passenger vehicles, what are the numbers that we've seen in sales and even in registrations?
So basically, like if you see, just to add on to what Abhishek ji said, the major demand is coming from the rural side of it, and with two-wheelers, especially in EVs, two-wheelers had seen approx of 9% growth, and commercial vehicles, which are the e-bus segment, and the overall the large fleet vehicle segment has increased by the two digits. And when you see, like obviously, like as we speak, like the reason why a company like TVS Motors is also growing is it's not just the demand in India only, but also their export numbers are also growing. So the companies, basically the Indian companies have started exporting, like TVS or Hero and Bajaj. And when you see the passenger vehicle, definitely as a segment is struggling because of high inventory among the dealers also. And overall, there is a degrowth with the passenger vehicles because again, the shift from the regular ICE engines to NEV vehicles is yes, anticipated on that side. And so and then three-wheeler segment also, as we see, is growing. The major growth contribution and the growth driver is the EV vehicle.
Okay,
And,
got it. Got it. All right. We appreciate you joining in, gentlemen, to help us out with a quick analysis of the auto space. We look forward to having you all back in the next couple of weeks to further discuss this particular issue. Well, time to move on then. Let's focus on Polycab. They reported a mixed set of numbers, but the EBITDA margins missed estimates. To discuss this and more, we have with us Mr. Jaisinghani, the chairman and managing director of the company, and Mr. Tongia, the CFO of Polycab. Good morning, gentlemen, and thanks a lot for joining in. Well, I have a two-part question. One is on the positive aspect, which is the revenues, and then on the margins. So let's get straight to it. At the half-year mark, you'll have done 10,000 crores of revenues. Can you hit that 20,000 crore mark in FY25 itself? So that's on the revenues. And on the margin front, your gross margins have come in at 10-quarter lows. And you all have mentioned that competitive intensity and product mix, that's one of the reasons that led to the margin miss. Do you want to alter that margin guidance of 12 to 13%? Please go ahead.
Thank you so much. Thank you for having us. You're right. The first half top line is 10,000 crore rupees. And as you would be able to recollect, we had given a guidance of 200 billion or 20,000 crore rupees of top line by fiscal 26. Considering that we have already achieved 10,000 crore in the first half, we believe we should be able to touch 200 billion or 20,000 crore rupees in the current fiscal itself. And we would beat our own guidance as far as top line is concerned. On EBITDA margin, your observations are correct. There is a bit of a contraction in the gross margins, predominantly because of competitive intensity. There was a fair amount of copper volatility in the current quarter. And for the retail business, at times, it's difficult to pass on all the increases to the end customer, considering the competition what we have in our sector. Having said that, the actual EBITDA margin for the cable and wire is within the guided range of 12 to 14%. And we believe that in quarters to come, we would continue to maintain that range. We expect that as far as the margins are concerned, that second half of the year should be better than the first half of the year.
Okay, all right. Just to push you a little bit more, Mr. Tongia, on that front, this competitive intensity, it's the first time I'm reading it in your, in your numbers. So if you could just throw some more light on that front, and also the FMEG business that continues to deliver losses. How is the turnaround going to take place there? By when could we see a positive number? Because those losses have expanded a little bit.
You're right. Let me pick up FMEG first. FMEG, your observation is right. Even in the current quarter, we have a small EBIT loss. Now we have a strategic roadmap in place for FMEG. We believe that this execution will start in the second half of the year. And in the next year, we should be able to get benefit out of it. Because of that, we believe that for the rest of the year, we will continue to have some losses on FMEG. As far as the cable and wire margins are concerned, we have two types of businesses. One is a cable business and second is a wire business. We leader as far as cable is concerned with a huge margin. As far as wires is concerned, though we are market leader, but there are other players as well in the space. Whenever there is a significant volatility of copper price, it becomes difficult for all the large players to pass on 100% increases to end customer because everyone wants to maintain the top line. And that is what we witnessed in this particular quarter. The copper LME movement was between $8,600 to $9,800. And that is why we were not able to pass on all the cost increases to end customer. Having said that, as I alluded a while back, we believe that the second half of the year should be better than the first half of the year as far as margins are concerned.
Even exports, your export revenue declined 29% on a year-on-year basis. Exports are high margins for you. What is the visibility of export revival and what led to the contraction in Q2?
You're right. Last year, exports revenue was slightly better than the current year. But if I were to just give you a quarter-on-quarter growth number, it has improved by almost 36%. Historically, exports used to be around 2-3% of our top line. Now it is in the handle of around 5-6%. And we believe that in a year or two, we should be able to take it to almost 8-10% of our top line. We have great traction in the markets like Australia, US, Saudi. And we believe that even the second half of the year should be better than the first half for the exports business as well.
Okay, gentlemen, good morning. Prashant here. Mr. Jaisinghani, if I can come to you, sir. Would you, so this competition bit which, Gandharv addressed, especially in the wire segment, I mean, is the competitive intensity increasing? You've seen you've seen this industry for a long time, or it's largely linked to sort of copper price fluctuation. So it's not competitive intensity on its own which has gone up. It's combined with copper price volatility, which is the problem. Go on, sir.
Yeah, basically it is dependent upon whenever copper go up suddenly, demand, we cannot increase the price, whatever is cost is all gone up. So there's a dip of margin decline in that period. So from last 3 months, continuously copper is going up from 8,800 to 9,200, 9,600, 9,800. Always this is going to be happening. But whenever again will go down, then margin will increase. So this will be definitely depend upon a quarter now. This suddenly metal has gone up, but now it is looking a very little soft now. Though again margin may be increase again in coming quarters.
What happens, Mr. Jaisinghani, if copper prices go to, as some forecasts are saying, to $10,000, $11,000, $12,000? What happens then? Will we have a temporary setback for a quarter, 2 quarters?
No, yeah. Basically we are changing the price of every 15 days to 1 month. So we are trying to pass on maximum to the customer. But whenever jump more than $300-400 at a time, then it is difficult to increase that. If it will be range of 200 to 300, then we can collect from the customer. There won't be any problem. But whenever jump will be more than $500, definitely going to hit margins for everybody's. But everybody cannot pass on all the price to the customer.
Sure. Gandharv, just sort of moving tracks. Markets have been expecting a order from the BharatNet program for Polycab. Can you tell us? I think the total value of the contract was about 10,000 crores, and the optic fiber bit is about 2,500, 3,000 crores. Sort of weigh in on the numbers, and where does Polycab stand for this?
Yeah. So the government of India has a particular ambitious project wherein they want to connect all the villages through optical fiber cable. The tender was submitted by all the participants, including Polycab, and we are expecting the final conclusion by the authorities in the current month. We have participated in all the tenders, and it is now on the authorities to finally conclude and award the tenders. Once we get some information from the authorities on the award, then we'll come back to you.
That you participated for is how much, Gandharv?
All the tenders.
What's the value?
Around 50,000 crore rupees.
You participated in tenders worth 50,000 crores rupees?
Like us, many of other players have also participated. Not all of us will get 100%. So it would be a number lesser than what we have participated. And we'll have to wait for the government to finally conclude on this.
You typically, so this happens every few years, I'm assuming, right? It's not, so could you tell us, what's generally, how do they distribute this? What's your expectation? What's the minimum that you're confident of winning?
So a niche project for the government. This is going on since last around 10 years or 7-8 years. This is, if I am not wrong, this is probably the second largest tender, and government will continue with this for a foreseeable future. We have participated in all the tenders, and I think we'll have to leave it to the government to decide. We as a manufacturer, we would love to maximize the top line and bottom line, but I think that's dependent on the customer, which is government in this case.
And typically, what are margins here?
Comparable margins, not significantly different from our domestic cable and wire margin.
So 12 to 14%, in that range?
Give and take. It has some conditions, and we'll have to wait for the final order. But your understanding is right, it should be in that range.
All right. Mr. Tongia, just to clear the point on margins, for this year itself, the second half of the year, margins will be better. Cables and wire business will be 12 to 14% in that band, and FMEG will continue to deliver some losses, right?
That's correct.
And FY26, at some point of time, FMEG could turn into the green as well.
We are trying our level best.
All right. Mr. Jaisinghani, let me come across to you then. Could you tell us, about, I think the family office as well has been participating in the equity markets, and you had sold some minor stake in the company. No further plans to reduce stake, or could that be in the offing? Point number one. And point number two is, have you all heard from the tax authorities with regard to that tax issue that was there towards the end of 2023?
Yeah, basically, we are family members are involved in total in Polycab work, and we are not interested to basically sell the shares. But everybody's little requirement to the family, personal families. So we already done equally. We all four with us has really only 0.5% only for the family requirements. Nothing for any business.
Okay. Mr. Jaisinghani, just one final word. As a part of your Project Leap, you had guided to achieve 20,000 crore by FY26. Now you're going to achieve it in FY25. So it's time now for the next strategy reset, for the company. Give us the direction. Are you looking at doubling revenues in the next 5 years? Where do you think Polycab will be?
Yeah, we are basically again doing a steady meeting by end of December. And in which we are really talking about where we should be in coming 5 years. Where the long-term goal and short-term goal we have to think very clearly. So we all team members are working on that. We'll come back to you about after having a meeting.
Any early indications of the direction?
Of the direction?
The details we'll get in December, sir, when you come out with that strategy. But just give us some hint, a trailer.
Trailer means definitely we want to grow, and we are putting a capex, and we'll definitely do what we are giving figure. Whatever figure we'll give, we will try to do more than that. So we will let you know in next quarter exactly where we want to be.
Okay. Thank you very much, Mr. Jaisinghani and Mr. Tongia for joining in. Wish you all the very best. That's Polycab. The stock is down close to about 3.5% today. Get into a break. On the other side is our special segment, Quarter Se Quarter Tak. Now, Axis Bank has come out with the numbers, but a whole host of banking results is still left. The big day is going to be tomorrow with HDFC Bank, Kotak Mahindra Bank. We'll get you the earnings expectation for the sector as a whole. Stay tuned.
Welcome back. The early morning dip has actually got bought into, and now the Nifty is up 100 points from the low point of the day. And what's leading the charge of the fight back is the Nifty Bank. That's up 200 points. That's closer to under 350-point recovery from the low point of the day. Sustainability of this is going to be rather important. But it's that time of the show where we get to our special segment, Quarter Se Quarter Tak, where we get your earnings expectations from each sector. Today, Abhishek joins us to tell us how Quarter 2 is likely to pan out for the banking names itself. Abhishek, over to you.
Well, Nigel, it could be a soft quarter for banks in Q2 FY25. Now, loan growth has slowed down to approximately 13% YOY from the 17.4% YOY that was there in Q1 FY25. The CD ratio, credit deposit ratio, remains high at about 79.6%, indicating that there is potential stress funding availability going ahead with respect to deposit momentum. Now, there are challenges in attracting retail deposits, prompting banks to rely on bulk deposit for growth this time around, which could actually weigh negatively on the net interest margins of the banks. So expectation is of us increased slippages and higher credit costs in certain segments such as microfinance, that is MFI, personal loans and credit card, which could hurt profitability. So the unsecured part of the lending business could hurt the profitability of the lenders. The outlook for net interest margin appears to be on a declining trend, now raising concerns over profitability, anticipated deterioration in several key metrics like loan growth, net interest margin, credit cost, slippages, and return on asset can be expected in Q2 FY25. The key discussion point will be the net interest margin trend. The reliance on bulk deposit could compress the net interest margin. Retail deposit has been a challenge for the system, so there is a need for strategies to enhance retail deposit growth. Credit risk management, now focus will be on managing the slippages and credit costs effectively. Overall, indication is of a cautious outlook for the banking sector in Q2 FY25, with several parameters suggesting a potential decline in profitability and credit quality as well. We have some of the estimates for Q2 FY25 coming in from Kotak Securities. SBI, the NI is expected to be up about 4% YOY and a decline of 0.4% sequentially. Net profit is expected to decline by 10% YOY and 24.3% sequentially. For Bank of Baroda, they expect NI to grow by 9% YOY and 1.5% sequentially, while net profit is expected to decline by 7% YOY and 7% quarter on quarter as well. For SDFC Bank, Kotak Securities estimates NI growth of 10% YOY and 0.8% sequentially, while they expect the profitability to grow by 2% YOY and about 0.4% sequentially. For ICICI Bank, they expect NI growth of 8% YOY and 1.3% sequentially, while net profit is expected to grow at 7% YOY and 0.9% sequentially. Back to you.
All right, Abhishek, thank you very much for that. So that's basically the expectations from the sector. Pranav Gundlapalli, Senior Analyst, India Financials at Bernstein. He's with us. Thank you for joining us, Pranav. So two questions. One, we've seen smaller PSU banks which have reported numbers over the last 2 days, and numbers have been at the margin good. Is that an indication for some of the larger peers there? And for private sector, should we take Axis as a template? Go on.
Okay, see, I think the numbers for the smaller banks, Bank of Maharashtra, Central Bank that report have been really good. But I wouldn't really take that as an indicator for the larger public sector banks, which have seen greater challenges on deposit gathering compared to the smaller ones. So to wait and watch for some of the larger ones to report in their deposit growth numbers. So I think for the public sector banks, the key to watch would be deposit growth, where there will be a divergence between the smaller and the larger ones. Coming to the private sector ones, I think at an overall sector level, the deposit growth is improving. I mean, much better than what we saw in say December last year or even last quarter. And therefore, the focus will be on asset quality. Now, if Axis is any indication, I think it does seem like we have a few more quarters of increased slippages left, even though it doesn't really get a lot worse than what we saw in the last quarter. So I think this quarter, the theme will be asset quality. Deposits, less of an issue, as we see that most of the banks that have reported so far have seen a good Q-on-Q improvement in deposit accretion.
Hi, Pranav. Good morning and good to see you in. Pranav, before we get back to the earnings, just wanted your word on the RBI action yesterday with regard to wrapping, Manappuram's subsidiary on the knuckles. And they also commented on these higher interest rates. How do you see this action? RBI seems to be coming down hard on some of these names.
See, I think it's a bit of fine-tuning of the pricing regulations on the MFI, right? So there are two parts to it. One is there has been concerns on the growth, and RBI has already taken several actions on it, be it in terms of raising these concern statements in various forums, or even asking some of the banks to increase their risk weights on their MFI portfolio. So I think that is one part of this. The second part is where they did change the pricing regulations on MFI some time back. There was a fixed rate for some time, then they changed it to a cost of funds-based regulation, and they had a new regulation in place. And this seems to be simply a reaction to certain players not adhering to the norms. So I wouldn't really bucket this in the set of actions to slow down growth. This seems to be more a pricing issue. And given the nature of the segment, I think RBI has always been mindful of what rates get charged in that segment. So not a dramatically new type of action from RBI. And the only concern we have from this is, given the size of the portfolio that's impacted, the four lenders put together is almost about $4-5 billion. taking away that amount of disbursals could just worsen the asset quality. I mean, most of the lenders have already started dialing back on growth. So you take one more set of players out of the action, then you could see further worsening in asset quality. So that, to me, is the bigger concern. I don't think any of the larger players will benefit meaningfully from these four players stepping out for a while. So overall negative for the MFI segment, but I don't see this as an action to stop growth as such.
Unsecured, MFI, I mean, all hot pockets, right?
Yes.
Pranav, so how does one make money in financials? Where does one make money in financials? Or what will make money in financials is, I guess, is the right way to frame it.
See, I think if you look at, I think it depends on the time frame, right? So if you have a longer time frame, I think most of the fundamentals seem okay. I mean, in terms of profitability, growth, at a sector level or even at individual bank levels, I think there is still, at a very healthy level versus the past. So what you're going to get is a nice compounding growth. I think that's what is the base case right now. And for a re-rating, I think we are still several quarters away from any catalyst that can drive a re-rating, right? So from our discussions, there seems to be a wait for the bottoming of ROAs for these banks, which we think will happen in the first few quarters after rate cut, which means we are looking at probably middle of calendar year 25 before we see any big re-rating as such. I'm talking about the sector level asset.
Okay, all right. So most fundamentals, etc., look okay, but you got to take a slightly longish time frame, right? View out there. By the way, Pranav, just very quickly, the worry at the margin for markets broadly is, it's only 20 days, but is the festive season going to be strong from that perspective? From a lender's perspective, are you hearing anything at all?
Yeah, it does seem to be a lot weaker than what was expected. But given that we've had a slowdown in consumer credit, even leading into the festive season, I don't think this adds too much of additional negative into the expectations. Right? So a slowdown in consumer was expected, and there's not going to be any big respite from the festive season. So that's the way we see it.
Okay, all right, well put. Thank you very much, Pranav, for joining us and running us through some of that perspective as far as banks are concerned. We'll take a break. We put the focus on commodities with Manisha on the other side. Stay with us.
Welcome back. Mitesh is now back with us on the show. Mitesh, what will the 10 a.m. calls be, and what have you made of the first 1 hour of trade?
Well, I think, one, as we suspected, is the Bank Nifty, which is showing strength on the upside, but the overall structure for the Nifty still remains weak. The idea should be that the Nifty, I think, if it gives a pullback above 24,750, 770, then I think, we have some kind of a reversal in the Nifty. Otherwise, it will be a choppy market with Bank Nifty still likely doing better than the Nifty. And even on the buying side, I have Axis Bank as a trading call. That's something which has turned around very nicely on the 2-hourly, 3-hourly charts. So buy here with a stop at 1160 for targets of 1220. And Bharti Airtel is something which I would take a negative view, and it's showing signs of profit booking and weakness. So keep a stop at 1702, look for targets of roughly around 1645.
Okay, all right. Thanks, Mitesh, for joining in and giving us your call on the index as well as on both those two calls. Bharti looking weakish, while Axis looks like it's good for more. But let's turn our attention away from the equity markets and focus on the commodity space. Manisha Gupta joins us to help us out with what's going on there. Manisha, take it away.
Thank you for that, Nigel. Well, I'm looking at the gold prices because there's no stopping this one. We're trading at yet another all-time highs in the Asian markets right now. So 2709 is an all-time high. In the early Asian markets, we saw 2700 take away. And since then, it has been a $16 to $17 of a jump up that you can see in case of gold prices. Well, 2685 for some time has been a very stiff resistance, but that got taken off very easily in the overnight markets there. So above 2700 there. With this, we are up by nearly 2.5% for this week. We are up 5% on the month, and for this year we are up by 30%. The gold clearly is outperforming various other asset classes and many other commodities as well, and with 30% of gains, gold is giving you the best yearly gain in 14 years now. That's the kind of strength we've seen on this one coming in. Silver as well, not too far behind, because we're looking at stronger gains onto that one as well. The support for the gold prices comes in from the fact that the European Central Bank for the third time yesterday cut rates by 25 basis points. There are more banks coming in, and you are also anticipating US Fed to cut interest rates by 25 basis points in the month of November. Going forward, it also is going to be about the uncertainty over the US presidential elections. When you pick all of those years, as and when there is US presidential elections, we have seen gold prices gain. And this time around, the uncertainty is just way too much. And then it also is about the geopolitical tensions. The war in West Asia has been adding premium to prices. The global central banks have been buying gold. And it's not just India which is buying gold right now in the physical sense, but the global funds on funds, ETFs, all of that also seem to be accumulating a lot of gold. The Western world actually is buying gold for the first time in a decade, the kind of way they're buying it. And then when you look forward, the forecast for the gold prices is much higher. Bank of America, Citi, and the LBMA meeting that just got concluded, all of them believe that $2,950 to $3,000 an ounce in the first quarter of 2025, if not earlier, is where you could be looking at the gold prices headed for. Silver also has continued to gain. Silver actually has outperformed gold with 34% of gains in this year until now. And the overall industrial metal as a pack also seems to be doing well today. On a week-on-week basis, we're still in the negative, but on a month-on-month basis, quarter basis, and YTD basis, we are positive for many of these base metal prices. And cementing those gains right now is the Chinese data. The third quarter GDP numbers coming in better than what the street was anticipating. And not just that number, when you look at the industrial output, retail sales, employment data from China, all of that has come in on the better side. So perhaps the China stimulus seems to be showing into numbers, and that has added some support to base metal prices. 0.5% to 2% of gains across industrial metals as well.
Thank you very much for that. Risk off equities, risk on gold. Brokerages see more than a 10% upside in gold prices from current levels. We'll get into a short break on that note. On the other side, we'll connect with Anurag Gupta of Havells India on their Q2 numbers. Stay tuned. Welcome back. We're off from the session lows. At the lows, the Nifty had gone down to levels of almost 24,560. But again, there's some moderation from the top as well, from levels of 24,700 that we hit about 30 minutes back. Net, we're down close to about 0.3% on the benchmark indices. The mid-cap index has also recovered from the day's low. The mid-cap index is now down nearly about 0.5%. Wipro continues to be the top Nifty gainer. That's up nearly 5%. Axis Bank has now overtaken it. So Axis Bank is up 4.7%. Wipro is higher by nearly 4%. LTI Mindtree, though, is struggling with a cut of 5%. But Havells is on our radar. They reported a weak set of Q2 numbers. Margins were under pressure, but the company's top-line growth was quite strong. Anil Rai, Chairman and Managing Director of Havells India, is with us on the show. Thank you very much for joining in. So your top-line growth at 16% was quite strong. We've seen about a 23% growth in cables and wires, about 15% growth in electrical consumer, 17% in electrical consumer durables. Can you tell us whether this kind of momentum will sustain? And in the conference call, you also said that the festive demand has started off on a good note because of an early Diwali compared to last year. What are the early numbers in terms of growth rates?
I think, first of all, I must say that, we are satisfied with the performance of the second quarter, and we are quite hopeful that a good set of growth numbers would continue in the coming times. One, the markets should be doing well, but also the fact that we are investing continuously in our distribution enhancement, our product expansion. So all those things will definitely come in play and deliver a good set of growth numbers. As far as festival demand is concerned, Diwali is a bit earlier than this year as compared to last year. It has started on a positive note in the third quarter. If this trend continues, so we should be looking at a strong third quarter growth as well.
So just in the first 15 days, what's been the growth rate?
Well, it's difficult to pinpoint because, it's not a like-to-like comparison because of the difference in the days of Diwali. But I think generally, as they said, it has started on a stronger note.
Okay.
All right. Hi, Mr. Gupta. Good morning and good to see you in. This is Nigel on this side. And it seems the street wants to buy the dip from a stock market perspective because as we speak, your stock price has moved into the green. So let's get to the critical issue then, the margin front. On a blended basis, it was in high single digits this time around, 8% odd. But you're guiding that things could improve from here on. So could you tell us, second half of the year, will margins be better than the first half? Point number one. And we had Polycab, earlier on in the show, and they were talking about competitive intensity, coming to life in the past quarter. And the street is a little bit concerned about that. Have you seen the same?
Well, as far as second quarter margins are concerned, there are a couple of things which we would say that should normalize in the coming quarters. One was the advertising spend. Because of an early Diwali, advertising spends were higher as compared to last year, and hence that expanded the expenses for this particular quarter. Second is the fluctuation in the raw material prices, which was a very strong fluctuation, and that affected the margins of our domestic wires business. And I think going forward, this should also normalize mostly in the third quarter, but primarily fully in the fourth quarter as well. So I think we are looking at a better margins in the third and fourth quarter. As far as competitive intensity goes, I think it's there in every business, and it's been around for quite some time. I'm not sure whether there's an increased competitive intensity, but that's what companies would do through their, brand build-up and distribution enhancement and all these things. And I think that's something which has always been there in all our businesses.
Okay, all right. So you're not sounding too perturbed about competitive intensity, but just to push you a little bit on the margin front, we should get back to double-digit margins in the second half of the year, give and take everything, since the ad spends that were preponed will be out of the way. Commodity prices have softened up a little bit as well, and you'll get the benefit of operating leverage. Fair to assume 10-11% margins for the second half of the year?
Well, the way we look at it is, one is the core Havells business, where we always try and target between 13 to 14% margins. And then there is a Lloyd business, which can vary quarter to quarter. Third quarter, again, is a lower quarter as the second quarter is. And then the fourth quarter starts building up, fourth quarter and first quarter. So if we keep aside Lloyd margins, I think we're always looking to get a 13 to 14% margin in Havells core business.
So for Lloyd Consumer, you've seen good growth on a year-on-year basis, but your margins turned negative in the current quarter after being positive in Q1. What's the growth trajectory from here on for Lloyd Consumer and even on the margin front?
I think, as far as Lloyd is concerned, it's on a very strong momentum. We have seen a lot of expansion in contribution margins for Lloyd as compared to the last quarter also. So we've actually seen positive momentum in Lloyd as far as margins are concerned. But it's a growth engine for us. It's a very large market with, other than air conditioners, we have low market shares. Air conditioners also, there's a huge scope for growth. So I think for Havells India company, we are looking at Lloyd as a very strong growth for engine growth in the coming times.
You want to quantify strong on a year-on-year basis, from year on for FY25 in comparison to FY24, FY26 onwards?
Well, usually we don't give guidance, and I think we'll retain that. But as I said, 20% growth in the first quarter, quite a very strong growth, but that was actually a one-time, like more than 40% growth in the first quarter as well. So I think this first half has started off well. Hopefully, we should continue in the coming times.
For Lloyd's, I think your non-room air conditioning business, the non-RAC business, performed better than the RAC business. So while you can't give us numbers, do you think this trend will continue?
No, I think RAC will continue to remain between 70 and 75% of the overall business, but that is for the year as a whole. The second and third quarter, as I said, usually is very low for AC business. But what is positive is we are seeing a good traction and growth in the non-AC business as well. So our washing machines, refrigerators, panels have started growing at a decent pace.
All right. Mr. Gupta, before we get back to the operational performance, there were some murmurs that maybe you're looking at some inorganic growth. Could you confirm or deny any of them? And, some of them were suggesting about some listed and unlisted companies. So is Havells on the prowl?
I think Havells has always maintained that we will continue to look at inorganic opportunities, though we believe that there is enough juice for growth in our existing core businesses as well. So we're always on the lookout, but I think I would not like to comment on any market rumors.
So in the second half of this fiscal year, could we hear about some kind of inorganic growth? Or do you think it's still in initial phases, so it'll be a few quarters ahead, if at all?
No comments.
Okay, all right. So if you have to give us a capacity utilization levels, then since you believe that organically itself you'll have enough of headroom, what kind of utilization levels are you all functioning at? And what is the capex plan? And in turn, what could be the revenue potential for your business as of now with the current gross block?
I think, we have been regularly investing in capex, and the only place where we found ourselves a bit lacking was the cables and wires business. Now the new facility at Tumkur has started operations last month. We have further committed for another 450 crores of expansion in our cables and wires business in that facility. So I think there's a lot of capex plan, and capacity utilization, which was high in the cables and wires business, is now coming to normal levels. So we can expect decent growth in that segment. So we have committed almost 1,900 crores of capex in the coming couple of years, out of which 1,000 crores will be invested in this year.
And this incremental capex of 450 crore, which you've announced, this is to expand your Tumkur facility.
This is to expand the Tumkur facility, which should start operations sometime in the mid of 26.
Middle of 20. And you said the cables and wires capacity utilization is now at a fairly moderate level compared to the higher levels that it was earlier. What's the number?
That's true. Well, we have expanded our capacity for underground cables by about 25%. So that will bring down the capacity utilization to between 75 and 80%.
Thank you very much, sir, for joining in, and wish you a very happy Diwali. Hope you have a good festive season. personally and professionally. Let's just take a quick a quick look at some of the stocks which are in the move. And right on top of the charts is Wipro. Now that stock is up close to about 4%. Now Q2 was a strong quarter for Wipro. The company's revenues turned positive after 6 consecutive quarters of a decline. Secondly, they also managed to expand their margins after absorbing 1 month of a wage hike. So margins expanded for the third consecutive quarter, and this quarter it was up 30 basis points on a quarter-on-quarter basis. Deal wins were healthy. The large deal wins were the best that we've seen in the last 10 quarters at $1.5 billion. They also announced a bonus issue. But here the street was disappointed with the guidance. The guidance for the company was -2 to 0%, which means after seeing growth in Q2, the company is guiding for negative growth in the December quarter. They said it's on account of furloughs, it's on account of lower working days, and some pressure seen in the European business. But is the management being a bit conservative? I think that's what analysts are asking. It's a new management, and even in Q2, the company ended closer to the upper end of its guidance band. So, I think the way the stock is reacting, one, of course, it's also underperformed some of its larger peers since the IT revival rally started. So, Wipro since June is up 26%, whereas stocks like HCL Tech have moved up close to about 35-40%. Valuations are on Wipro's side. So, these are some factors which are helping, the stock do well. Strong Q2, maybe the Q3 guidance is conservative, valuations are less than peers, and the stock compared to some of the other, the HCL Techs and Wipros of the world have also, HCL Tech and Infosys of the world, it's also underperformed. So Wipro is right on top over there, but on the way down, you've got LTIMindtree, and that is struggling in trade. So LTIMindtree is down nearly 5%. Decent growth, but not as much as what the street was anticipating. The stock has now tumbled nearly 5.5% in Infy. Just take a look at Infosys. It's extended its fall. It opened with a cut of about 2 to 3%, and now Infosys is down nearly 4.5%. So big fall there. With that, it's a wrap on Bazaar from the entire team. Thank you for watching. Chartbusters is up next.